Hey everybody, Johnny Seville from Acorn Wealth, and this is your executive summary for the 12th of August 14. So, the S&P 500 has continued its breakdown. We saw today a test of the previous upward trend line. You can see that we moved in and tagged that right on the nub yesterday and have pulled back from there. On light volume though, 2.79 billion, and then today only 2.6 billion. So it'll be interesting to see where this continues going forward. We're right down actually on close to a 50% Fibonacci retracement here from one of these previous moves. So what we're looking at is a bit of a mixed bag of looking at ways to play both long and short. The first one that actually came up was PRTA. Now this has actually got some interesting stuff going on with it, because you can see that it's a biotech company. So kind of has a life of its own. It's had a huge trading range with some moves as low in the year as down here at $15 all the way up to 45 and back down. So it's an interesting stock from a speculative standpoint, because it's broken this trend line, as we saw the breakout occurring here. It's then built a base on higher lows, and it just broke its shorter term trend line over the last couple of days, and volume has been increasing nicely. There was 419,000 shares today, over 172,000 yesterday, and it has that momentum. You can see the smart money down the bottom just breaking into accumulation zone. Well, what I found was kind of a bit of a special ingredient as well with this particular one was then going in and having a look at its options. Now, if we go to that screen, you'll see here. There we go. The December 2014 options. Have a look at what you got sitting there. We've actually got 2,192 open interest at the $25 calls, and 1,447 at 45. So there's some interesting stuff going on there. Now, if we go and flip over to see what the insiders are doing, you'll see PRTA, biotech. We've got here we go, the chief legal officer making some just small purchases, but all purchases nonetheless throughout the most recent history. And then institutionally, we can actually see that two of the institutions have recently bought more in the company as well as previously in the year. Much more buying than there has been selling. So that's interesting. It shows you that somebody's obviously got a speculative feeling that this is going a lot higher, and the charting pattern may just be coming around to be right. On the short side, GVA, Granite Construction. This stock broke down from a fairly consolidation pattern. The money flow was draining out the back. It rallied down, hit the 32 mark, had a sharp rally up, was met by instant selling, and there's now going to be a secondary opportunity for a put play or a short play on this. It's right under that resistance zone, and from here where we're at currently at 34.25 down to this support zone, there just above 32. There's a first target, and then you can look. I'd be looking at another support point then to be as a possible second target here at the 22.3% Fibonacci, which is down at $30. So well over a 10% drop potential average on either of those targets, and you can see that the money flow has certainly come out the back of this trade also. And MXWL is the last one I wanted to chat about. Some big strength in the move today. Again, this is more looking at potential swing to the upside. 1.62 million shares traded today over yesterday's 646,000 as it broke the gap down resistance set just marginally, I believe. The high here was 1010. What was the high today? 1015. Yeah, so just slightly breaching that. And I'd be looking for a pullback and possibly for this to develop, but this would certainly be one for your watch list. If we start to apply some of the other moving averages, you can see we're going to have some resistance there. So a further rally up, then a pullback could be what to look for. But that would be the third one to keep in your back pocket to see how that develops in tomorrow's market. And a continuation, if it can squeeze and break that moving average, is where that becomes attractive. Because if it can hold this $10 support, then there's not a hell of a lot to stop it until we start to get up into this $13.30 range, which is where likely this, around this $12.50 range, which is going to find where you had that support there and where the moving average will likely come down to meet it. If we look at our Fibonacci retracements, that's right around this mark here is the 50%. So yeah, so that in that region is going to be where we experience some trouble. Depends on where the 50-day is once we get up there. So that's it for today's executive summary. Hope it helps, and we'll see you all in the next video.